As we enter 2026, the risk-reward dynamics for Indian equities appear increasingly favorable, supported by moderated valuations, accommodative central bank, and growth-supportive government policies. Structural change in household savings is expected to continue to play out as well. Against increasing global market uncertainties, the Indian economy continues to benefit from strong structural growth drivers and the government's ongoing reform initiatives. India's resilience and macroeconomic stability were further validated last year by S&P Global Ratings, which upgraded India's sovereign rating to BBB. India's reforms have been significant, with the government prioritizing ease of doing business and reducing the tax burden on the households. Notable measures include the simplification and reduction of personal tax rates in 2025, as well as the initiation of long-awaited improvements to the goods and service tax regime. These measures will potentially boost consumption. India's economic growth has received significant support through unprecedented monetary easing and liquidity injection, with the Reserve Bank of India aggressively cutting rates in 2025. Additionally, the RBI has introduced growth-oriented deregulation in the banking sector, which are expected to drive positive effects on growth in the medium term. The central bank measures are anticipated to stimulate growth by boosting both consumption and investment. Externally, any moderation in tariffs between US and India could serve as a meaningful catalyst, particularly for export-driven sectors. Though it is worth noting that India's exports of goods to the US is only 2% of GDP. Earnings growth and improving return on equity continue to be the primary drivers of Indian equity returns. Despite a period of earnings downgrades, we are now seeing signs of stabilization. In our Indian equity strategy, we continue to be constructive on financials, where we have a broad and diversified exposure across lending and non-lending plays. Real estate, which is seeing an upcycle in demand, and consumer sectors, which are supported by expectations of broader economic recovery. 2025 was a challenging year for foreign investor participation, with net outflows of $18 billion for the year. This led to foreign ownership of Indian market touching a 15-year low. In contrast, domestic investors emerged as major buyers of Indian equities, providing a strong support to the market. Recent foreign inflows suggest a positive shift in sentiment. As earnings stabilize and recover, we are seeing a renewed appetite for Indian equities. This change in positioning could act as a significant tailwind for market performance in 2026. Despite market volatility, many of the long-term investment themes for Indian equities remain solid, including India's role in the global manufacturing landscape, its significant investment in infrastructure, rising discretionary spending among consumers, and transformative digitalization initiatives. For investors, India remains a market that offers resilience, growth, and opportunity.